This is Introduction to Federal Income Tax Law for tax year 2021. Here are the topics for this presentation. We start with the federal tax law basics, and then we get into the types of income, the various types of income and various deductions, also credits. So we're going to talk about all three of those. And then we're going to look at the Form 1040 and the associated three schedules, 1 through 3. Along with the 1040 SR especially designed for seniors who have difficulty reading smaller print. So those are the topics. So the basics of United States tax law. First of all, the basic, getting about as basic as you possibly can, all of the income that a person receives is taxable in the United States, unless, of course, the law says that it is not. And no deduction is allowed unless the law says it is. No credit is allowed unless the law says it is. So that gets down to the nitty-gritty, the very basics of it. Let's talk a little bit about simple calculations on the front page of the 1040. First of all, gross income. How do we calculate adjusted gross income? So if you take gross income minus any adjustments to income, and there's a section on the, we'll look at the 1040 itself and see that there's a section called adjustments to income. Then you get the adjusted gross income, the AGI. Then if you subtract out the tax deductions, which could be either itemized deductions or standard deductions, you'll come up with the taxable income. So that's simplifying as much as possible the tax calculations. So with respect to US tax law, there really are only two types of income. There's taxable income and there's non-taxable income. And under each of those categories, there is what's called earned income or unearned income. So there's taxable earned income, there's taxable unearned income, there's also non-taxable earned and non-taxable unearned. So taxable income must be reported and is also subject to United States tax, federal tax. Non-taxable income may need to be reported, but is exempt from tax. So in some cases, non-taxable income does have to be reported because it plays into other calculations in the tax law that don't necessarily relate to taxability or not. What are some examples of earned income? Well, earned income can be income that's received from wages, self-employment, long-term disability payments prior to the minimum retirement age, or even the strike benefits that come from unions. Let's look at some examples of unearned income, which is generally income that's not produced from work. So we have unemployment compensation, which is an example of unearned income, interest and dividends, capital gains, Social Security benefits, retirement income, rental income on Schedule E. Now, scholarship income can actually be either earned or unearned, depending on what it's being used for. So for determining somebody's filing requirements, it's considered earned income. And also for purposes of the standard deduction, it's also considered earned income. But otherwise, it's considered unearned income. So it kind of plays both roles. Alimony, it can, in many cases, be taxable or not taxable. We'll get into that once we get into learning the tax law. But alimony can sometimes be taxable and other times be not taxable. But if it is considered taxable for a particular individual, then it's considered compensation for purposes of determining their ability to contribute to an IRA. Adjustments and deductions. Adjustments and deductions reduce a taxpayer's taxable income. There are two categories on the 1040. First is adjustments to gross income. So there will be a list of things on the 1040. We'll look at those in a few minutes that are listed as adjustments to gross income. The second category is deductions. They can be either itemized deductions or they can be the standard deduction. These days, the standard deduction is far more popular, especially with married couples. The standard deduction is quite generous, so within the last couple of years, taxpayers have been finding it difficult to actually itemize enough deductions that would surpass the standard deduction that they're being allowed. So we're seeing more and more standard deductions, fewer and fewer itemized deductions. And for purposes of tax preparation, itemized deductions really can be very time consuming for the preparer. So standard deduction is far more beneficial and far easier to do than the itemized deductions. So you'll see that later on. Now let's talk about credits. There are two types of credits. First of all, a credit being different from an adjustment to income or from a deduction. A credit really reduces the tax liability dollar for dollar. Now, what does that mean? What's the difference between an adjustment to income and a credit? What does dollar for dollar mean? So if somebody receives a credit, let's say that somebody has a tax liability of $1,000 and they receive a credit, let's say for child care or for some other, there are many different credits that we'll get into later on, but if they receive a credit that's $1,000, then their $1,000 tax liability is completely wiped out by the credit. So they owe nothing. Now, an adjustment to income, on the other hand, is based on your effective tax rate. So if somebody had an effective tax rate of, let's say, 5%, and they reduce their income by $1,000, then their effective gain from that adjustment to income is really only going to be $50. So it's not dollar for dollar, it's only 5% of the $1,000. So it's a huge difference. So if somebody has a choice of taking an adjustment adjustment to their income or taking a credit, then the credit is always the choice because it's dollar for dollar. So let's talk about the types. There's a non-refundable credit and a refundable credit. A non-refundable credit is limited to tax liability. It cannot reduce tax liability below zero. So a non-refundable credit, let's say that somebody had tax liability of $1,000 and they had a non-refundable credit of $1,500. They would not get the full $1,500 as a credit. They would only get $1,000 because you can't reduce the tax liability to less than zero. On the other hand, a refundable credit can reduce the tax liability below zero. I'll give you an example of that. Single parents who have young children, and 2 or 3 children, let's say, may have no taxable income at all. So they have no tax liability. However, they do qualify for the earned income credit, which could be thousands of dollars. Usually, I'd say the average is probably around $3,000 that they would qualify for, and they would receive that regardless of whether they had tax liability or not. So that's probably the prime example of a refundable credit. There are certainly others, but earned income credit is kind of the more common one. Let's look at the Form 1040 for 2021 and its related schedules. We have two different Form 1040s in 2021. One for the standard format, which is for people generally under 65 years old. And then we have the 1040 SR for seniors or taxpayers 65 or older that actually has larger type and covers 3 pages rather than the 2 pages of the standard format. Along with those, the 1040 form, there are also 3 schedules associated with the 1040, the Schedule 1, Schedule 2, and Schedule 3. And those schedules do not change regardless of whether it's a senior form or the standard form. So there's only one set of schedules 1, 2, and 3, and they don't have any of the larger type for the schedules, only for the 1040s. So 3 pages for the seniors and 2 pages for everyone else. Next page. Here is the top of page 1 of the standard 1040. You start by seeing all of the various filing statuses listed at the top of the form, and then it moves on to names, addresses, uh, social security numbers. And then you see virtual currency question. This is a question that's been on the tax return now for, I think this is probably the 4th year. At any time during 2021, did you receive, sell, exchange, or otherwise dispose of any financial interest in any virtual currency? Yes or no? So that question is getting more and more important each year because more and more of our citizens are investing in virtual currency. And if virtual currency is received as income, it is taxable. So the IRS really cares about the fact that people are invested in virtual currency and how they're using that virtual currency. The most popular of those currencies, of course, is Bitcoin, but there are literally thousands of different virtual currencies that are in use today. So you can also see that we have a place for dependents on the top of page 1, and they would all be listed here with their social security numbers and their relationships, etc. So let's move on to the bottom of page 1. Here is the top of page 1 for the 1040 SR for seniors 65 years and older. You can see that the typeface on this form is easier to read, larger typeface. But other than that, it has the same information as the top of the 1040, the standard version for people under 65. So just as it has a different look, you'll see as we go on, though, that the 1040 SR gets a little bit more interesting and it's harder to find things on the 1040 SR because, well, you'll see. Here's the bottom of the standard 1040, page 1. And you can see here that essentially what's going on here is the taxable income calculation. So this is where all of the wages, qualified dividends, IRA distributions, all of the various streams of income are brought together, capital gains, and then the standard deduction, or in some cases the itemized deductions, is then taken away from those income streams, thereby giving you taxable income. So that's where the taxable income is calculated on the standard form. So now let's move on. Here's the bottom of page 1 on the senior version of the 1040. So again, because of the larger type, the bottom of page 1 does not cover as much information as the standard version does. So this ends with the adjusted gross income calculation, whereas the previous bottom of page 1 had the taxable income calculation. So the senior version doesn't get to calculating taxable income until it gets to page 2. So let's look at page 2. This is the top of page 2 of the standard 1040. This has quite a bit going on. It starts with the tax liability. So the actual tax that they're being assessed for 2021 is shown here. And below that, we get into payments and refundable credits. So you can see the federal income tax withholding. They're doing, in 2021, they did a little something different here, and they're actually showing us where the federal withholding came from, whether it was on forms W-2, 1099, some other forms. So we didn't have that breakdown in 2020. We now have it in 2021 and probably moving forward. Then you can see the refundable child tax credit, the American Opportunity Credit. So various refundable credits showing up here as well. And then we get into the refund if they are getting if the taxpayer is receiving a refund, and balance due if they owe money. So now we'll get to page 2 on the senior form. Here we see the top of page 2 on the senior version of the 1040. And it starts off with the standard or itemized deductions, and then moves on to taxable income, and then actually calculating the tax liability that the taxpayer is responsible for. There's also a non-refundable child tax credit listed on here, and it ends up at the bottom on line 24 with total tax. Here's the bottom of page 2 on the standard 1040, and you can see here that all that really is going on is that there's a place for a third-party designee, which in Tax-Aide you will not see anybody listed here as a third-party designee, so we can completely ignore that. There's also a place for signatures. Now, you will only see signatures here if there is a mailed-in tax return. So if there's a situation where the tax return needs to be mailed via USPS, the taxpayer is required to sign the tax return on these lines, both the taxpayer and the spouse. But typically, if the tax return is electronically filed, you will not see signatures here. You will, however, see probably occupations, and you will see the IRS identity protection PIN over on the right-hand side. So IRS identity protection PINs are getting very important and are being used to protect taxpayers against fraud. So as years go on, we're going to see these fields being used more and more often. I certainly use them on my tax return now. It's sort of like two-factor authentication, where you have a code sent to your telephone, only in this case, they provide you with a PIN number, and as long as the tax return is filed with that PIN number on it, then it's a lot less likely that there is going to be any fraud going on. So the PIN number is something that you get from the IRS. You don't share it with anybody. You just keep it to yourself, and you use it when you file your tax return. So down at the bottom, you'd also see information about the particular site that you work at, that you volunteer at, and that would be listed at the bottom here. So that's the bottom of page 2 on the standard 1040. This is the 1040 Senior Edition, 1040 SR, the bottom of page 2. Here we can see payments and refundable credits. So it starts off with federal income tax withheld from various W-2s, 1099s, etc. And then we move into the earned income credit, which in a sense is a payment toward your tax liability. And then we see refundable child tax credit, American Opportunity Credit, etc. And it ends with total payments. So that's the bottom of page 2 for the 1040 SR. I mentioned before the 1040 SR has 3 pages rather than the standard 2 pages of the standard 1040. So this is page 3. You can see that if a taxpayer qualifies for a refund, you'll see it here, or if they owe money, you'll also see that under amount you owe, and then you can see the third-party designee and the signatures and everything that we talked about in the previous slides. As I mentioned before, there is no senior version of Schedules 1, 2, and 3. So Schedules 1, 2, and 3 will be the same regardless of whether it's a standard standard 1040 or a senior 1040. So here is Schedule 1 that you're looking at, and it has additional income. Additional income and adjustments to income used to be in 2020 used to be on the same form. Now they are on separate forms. So we have additional income starting with taxable refunds, alimony, business income, other gains and losses, farm income, unemployment. So we have lots of different additional incomes, all of which is tallied up at the bottom and then moved over to the 1040. So the total amount that comes from this page goes over onto the 1040. Here is Schedule 1, page 2. This is adjustments to income. As I said before, this used to be on the same page with the prior page, but now they split it up. So adjustments to income would cover things like educator expenses, business expenses, health savings account, deduction, uh, deductible part of self-employment tax, self-employed health insurance deduction, alimony paid, the IRA deduction, student loan interest deduction. So those are all adjustments to income. And here again, once those are all totaled up, they would be placed on the page 1 of the 1040. Moving right along. Here is Schedule 2, page 1, additional taxes. Here you have things like alternative minimum tax, also called AMT, which we don't get too involved in because it typically affects higher income wage earners. So we don't run into that very much at all. Excess advance premium tax credit that has to do with Obamacare and people that are under 65 that have to purchase health insurance. Sometimes they don't contribute enough toward that health insurance and have to collect more at the time of filing taxes. So that's where they do it on Schedule 2, page 1. Also, self-employment tax on Part 2, uncollected Social Security, Medicare tax. So various other taxes that eventually will also end up on the 1040, pages 1 or 2. Schedule 2, page 2. Here are more additional taxes that are just a continuation of the previous page. A lot of these are quite obscure, so I'm not going to really talk about them. They happen pretty rarely, but you may run into them from time to time. Schedule 3, page 1. This is where you will find non-refundable credits. Schedule 3 is additional credits and payments, and page 1 is the non-refundable credits. So here you will see education credits, the retirement savers contribution credit, residential energy credits. So pretty much all the non-refundable credits are listed here. And then we get into the page 2 of Schedule 3. Here is Schedule 3, page 2. These are other payments and refundable credits, Part 2. And so there was a whole list of possible refundable credits. Notice on here that credit for child and dependent care expenses on Form 2441 is listed on here. Qualified sick and family leave credits, those types of things. But some of these others are a little more obscure. So that's it for the end of the schedules and the end of the 1040.